What's up, guys? I'm Nobody Special, and on this channel, we've been talking for a while about the China Evergrande collapse, and we've been saying that Evergrande is just a symptom of the larger Chinese housing collapse, and that it's those Chinese banks that you need to keep an eye on. Well, we may be seeing the first signs of stress in the Chinese banking system. Wait till you see this report that came out from Bloomberg yesterday about China's Minsheng Bank. You ready? Hit it. Thank you for joining me. I'm Jack Gamble, and I'm Nobody Special, and we may be about to enter the next phase of this China housing collapse, moving on from just the developers showing signs of trouble to now the contagion may be spreading to the Chinese banking system. And we got this article from Bloomberg yesterday detailing a research report by Citigroup that was dated in September. Keep in mind, this is a few months old information that says China's Minsheng Bank is the worst performing bank in the world. Their shares are down over 30% across 2021. And that this bank has over $20 billion of exposure to high-risk Chinese developers. Now, before we get too deep into this report, I have to ask you folks, could you please like this video, subscribe to my channel, don't forget that notification bell. It really helps me out and it helps me to keep this channel growing. I would be forever in your debt. And now it is that time. We are going to shrink my big, fat melon of a head and get into this report. And this is in Bloomberg, dated yesterday. And man, oh man, this could be big. World's worst performing bank lent billions to China Evergrande. Minsheng shares have led losses in Bloomberg's World Bank Index. The bank is among the largest creditors to China Evergrande. This is dated yesterday. It was once hailed as the future of Chinese banking, a privately run lender that would mint money by outmaneuvering its state-owned rivals. An ill-fated push into property lending has instead turned China Minsheng Banking Corp into one of the biggest casualties of the real estate debt crisis that's roiling Asia's largest economy. Battered by mounting losses on loans to developers, including China Evergrande, Minsheng stock tumbled 31% in the 12 months through last week, the worst performance in the 155-member Bloomberg World Bank's index. Hedge funds and other short sellers are more bearish on the lender than any of its global peers. And here we can see in black, this is the performance of Minsheng Bank stock. And meanwhile, in red, we can see the other global banks have actually performed very well over this same time period. People familiar with Minsheng's operations say the bank, founded in 1996 as China's first non-state-controlled lender, is now in damage control mode. It has restructured its real estate finance group to give more power to local branch managers, made reducing holdings of the property debt a top priority for 2022, and plans to cut salaries for some staff by half, the people said, asking not to be named, discussing private information. It is amazing how these companies default to screwing their employees at the first sign of trouble, just like Evergrande pushing those off-balance sheet wealth management products onto their employees to try to steal money from their own people. Here we have this bank cutting salary by half for some of its employees to make up for their bad bets on Evergrande. And again, I have said it before, and I'll say it again in this channel. If you see some type of investment product offering you a risk-free 15 or 20% return, run. They're selling you hot garbage. Reading on, Minsheng's plight underscores the widening fallout from Chinese President Xi Jinping crackdown on the property industry and other parts of the country's capital-hungry private sector. It also offers a warning to global financial firms that are investing billions of dollars to expand in China. Bets that seem like sure things can quickly sour when the nation's policymakers decide to change course. And that is why I've said for a long time, I would not touch any investment in mainland China with a 10-foot pole, because the Chinese Communist Party can take what you got at any moment that they decide to. At any second, they can just steal your investment, and I will not participate in a market with that level of nonsense going on. We have enough of that baloney here in the States. I don't need to go overseas for it. Now, here's where we get into the numbers. This is the part that's a little worrying. Minsheng has about 130 billion yuan, or $20 billion US, of exposure to high-risk developers, amounting to 27% of its so-called Tier 1 capital, the most among big Chinese lenders, Citigroup analysts estimated in a September research report. Okay, so this sentence, this is the meat and potatoes of this article. First things first, I want to mention that this is based on September data. This is a September research report from Citigroup. And if the research report was released in September, it's probably based on data from August. So this is old data, and they're talking about high-risk developers. I want you to keep in mind that back in August, not all of the developers that are now considered high risk were considered high risk back then. Keep in mind this video I did on Shimeo a couple of weeks ago, where Shimeo once was considered an investment grade lender, and then we find out they have all of this garbage on their balance sheet and they get quickly downgraded, and now Shimeo is at the front of the line as the next developer to go bankrupt. So what might have been considered a low-risk developer at the time that this report was issued may now be considered a high-risk developer. So that is one way in which the actual exposure of Minsheng Bank could be significantly higher than even this report is saying. The other thing I want to mention is that the data coming out of China is doo-doo. It is absolute poop. All right? Keep in mind this point. Evergrande, the company that started this whole mess, Evergrande has never once reported a quarterly loss. Not once. How does a company with $300 billion of debt and no sales manage to squeak by without ever reporting a quarterly loss? How? They just outright lie on their balance sheets. That's how. They're crooks. And there is absolutely no control over the information that comes out of these crooks' mouths. So when you hear that they have $20 billion of exposure, for all we know, it could be 40, it could be 60, it could be 100. It could be so much worse than they're saying, and look no further than Evergrande, who has apparently never recorded a quarterly loss, even though obviously they have been absolutely burning through money for some time now. Now, the last point I want to mention here is let's forget about the fact that this is based on old data, and let's forget about the fact that you cannot trust a single number that comes out of these people's mouths. Take a look at that 27% of Tier 1 capital, okay? Tier 1 capital, that is the bank's emergency reserves. Tier 1 assets and Tier 1 capital, that is their most pristine collateral. Think of that as like the shiny gold, the cold hard cash that they have in reserve to absorb losses from riskier assets. And just these high-risk developers back in August that they're willing to admit to amounts for 27% of their Tier 1 capital, more than a quarter of their emergency fund. And I would also point to your attention that they could just be lying about how much Tier 1 capital they have. Again, these numbers are garbage. So chances are the actual debt from Evergrande and these other high-risk developers, for all we know, could be well in excess of all of their Tier 1 capital. This bank could be on the brink of collapse, and we wouldn't know it until after it's happened. Now, I don't want to get too hyperbolic here because this bank has not collapsed yet, okay? This is just a warning sign that this bank is at risk. But when you factor in how unreliable the data is and how old the data is, plus the reputation of these lenders for just outright lying, folks, it is really hard to tell just how healthy this bank is. And the fact that they're willing to admit that it's this bad says things are actually much, much worse, to me at least. Now, there's another point I want to draw your attention to here, and that is off-balance sheet wealth management products, because Minsheng Bank has a history of this shadow banking off-balance sheet wealth management products. And if you don't know what a wealth management product is, I want you to think about it as basically an unregulated debt security, a secret contract between the bank and retail investors, where the retail investors make loans to the bank in exchange for promises of ungodly high returns. These things are hot garbage. They are junk. They are the worst of the worst. Just like Evergrande has this unknown amount of this high yield garbage debt on their balance sheet. It's a liability that they don't report in their quarterly numbers. We have no way of knowing just how much of this off-balance sheet wealth management product debt that Minsheng is holding. So we can only look to their history and see what might be going on there. And I want to draw your attention to this note. This was released back in August of last year from Fitch, affirming Minsheng Bank's long-term BB plus outlook. And I want to point out that BB plus, that is Fitch's way of saying, as this is not investment grade, this is high yield, junk, garbage, dog poop. Fitch Ratings, and again, dated August 31st, 2021, Fitch Ratings has affirmed China's Minsheng Banking Corp's long-term foreign currency issuer default rating at BB plus, and assigned a short-term IDR of B. The outlook on the long-term IDR is stable. At the same time, Fitch has affirmed CMBC's viability rating at B. Key ratings drivers. The bank's long-term IDR is driven by state support and is at the bank's support rating floor of BB+. This reflects Fitch's expectation of a moderate possibility of extraordinary support from the Chinese sovereign in the event of stress. This takes into consideration the bank's limited market share, especially in terms of retail deposits, lack of strong shareholder and parental support, as well as limited regional significance and local government linkage. And what Fitch is saying here is they are not sure the Chinese government would bail out this bank. And I also want to point to this paragraph down here. The bank's exposure to entrusted investments, around 9% of assets at the end of the first half of 2021, and off-balance sheet wealth management products, around 22% of deposits and 12% of assets, is large considering its limited capital buffers. And again, these are only estimates because wealth management products are not carried on the balance sheet. And Fitch is saying that this is a risky bank that they have estimated to be about 12% of their assets in these wealth management products, representing about 22% of deposits. And again, these are only estimates, so we can only go by what our eyes and ears tell us and look to history for a little bit of an idea on what that might be. And if you look here, this is in the New York Times. Now, this is an old article. This is from 2017, but I just want to show you the history of Minsheng Bank, and you can be your own judge and try to estimate just how much of this wealth management product garbage might actually be owed to people by this bank. Chinese investment scandal highlights shadow banking risks. This is April 19th of 2017, when Lisa Wang sank her retirement money, all $730,000 of it, into a single investment. Her fund manager repeatedly said the product was risk-free. Ding, 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 ding. You should have alarm bells going off here. It wasn't. On Wednesday, Mrs. Wang, 61, joined about a dozen other customers in the lobby of a Beijing branch of the bank China Minsheng, pressing employees for details and demanding their money back, after the Chinese news media reported that more than $400 million of investors' money had disappeared. I invested money because they told me it's a product that would guarantee my capital, Mrs. Wang said. I'm so angry and disappointed. The scandal highlights a big and growing risk in the Chinese economy. Trillions of dollars of opaque financial products with little regulation and oversight. Typically marketed as low risk, these investments, known as wealth management products, offer tantalizing returns that seem to handily beat the interest rates that banks offer on regular accounts. Lured by the assurances of safety and promises of profit, investors have plowed their savings into the products. But many of the investments have focused on coal, steel, and real estate, areas that are facing overcapacity problems in China. As those areas show signs of trouble, the worry is that many of the investments could fail, creating a major shock to the Chinese economy, the world's second largest after the United States. The products, which are often kept off banks' balance sheets, are part of a vast, shadowy system of lending that has girded the Chinese economy and kept businesses growing. The Chinese government has stepped in to protect investors, avert ripple effects, and ensure social stability. But those bailouts create their own challenges. Investors assured that the government will come to the rescue do not worry about the potential risks and continue to pour money into the products. It's okay. If these guys fail or if these guys are crooks, the government will give me my money back. What could go wrong? According to the state news media, Chinese investors have put $4.4 trillion into wealth management products, equivalent to about 40% of the country's annual economic output. I have since, now this is a 2017 article, I have since heard numbers anywhere from $8 trillion US to $11 trillion US is in these shadow bank products, these wealth management products. Okay, this stuff is hot garbage and it is rampant in China. It invites moral hazard, says Victor Shi, an associate professor at the University of California, San Diego, who specializes in the politics of Chinese banking policies. When you tell people that they will get bailed out, then they will engage in very, very risky behavior and also opportunistic behavior on the part of banks. China Minsheng, the bank at the heart of the latest scandal, had a good pitch. The product that told investors would provide a return of 8 to 27%. Alarm bell number 2. 27% returns, risk-free? Doesn't exist, folks. You see that? Run. To sweeten the deal, the bank offered free golf events and trips to South Africa and other overseas locales. Red flag number 3. If these investments are so good, why are they bribing you with free golf and trips to South Africa? The investment, a good investment, sells itself without that crap. Encouraged by the bank's strong reputation, investors, including many older people, forked over a minimum $145,000. My fund manager stressed again and again that there is no risk, said Mrs. Wang, the investor. Again, that is another red flag. Every investment carries some risk, and any investment that is promising you a 20+% return, that has a lot of risk, because if it didn't have risk, they'd be able to borrow that money for a lot less interest. The scandal at China Minsheng erupted when a Chinese newspaper, the 21st Century Business Herald, reported on Tuesday that the bank's wealth management product was forged and did not exist. The paper said more than 120 investors had registered to ask the bank to refund their investments and carry out an investigation. The Chinese police have detained the head of the lender's Hangtianqiao branch, Zhang Ying, the bank said in a statement to Shanghai Stock Exchange. On Tuesday, the bank said it was assisting the police with an investigation. And yes, once these banks are investigated, they're always so forthcoming and so cooperative, and they always say things like, we welcome dialogue with law enforcement. And we have a unyielding commitment to transparency, right? This is the kind of stuff these crooks always say when they're caught with their hand in a cookie jar. Investors gathered at the bank on Wednesday, pushing for the bank to make good. We're not going home if you don't return us our money, one of them shouted. And this goes on to describe these protests that happened in front of Minsheng Bank. So Minsheng Bank has a history of misusing these wealth management products, of conducting themselves like total crooks. We know they have at least $20 billion of exposure to on-balance sheet Evergrande debt and other high-risk developer debt as of August. But you know what? What was considered a high-risk developer back in August? It's different now. Now there's a lot more high-risk developers. So back in August, when a lot of that other stuff was considered low risk, now it's considered high risk. Folks, this bank could be on the verge of collapse. And again, these wealth management products, folks, this is a big wild card in this race. There is no way of knowing how much this stuff has because they do it in secret. They don't report it. They take people's money and then they don't report any liabilities on their balance sheets. It is total shadow banking. I mean, they almost conduct themselves like reverse loan sharks almost. And just to remind you that this is what it looks like when loads and loads of people get ripped off in these wealth management products. And this was dated back in September. This is from the Queen of 17 on Twitter. These are people out in front of Evergrande demanding their money back because Evergrande has not made good on payments to its wealth management products. And this is the Chinese Communist Party's worst nightmare. Hundreds, even thousands of people, nationwide, possibly even millions of people who are afraid they're losing everything. And people like that are difficult to control. And if there's one thing the Chinese Communist Party needs, it's control in order to maintain its grip on power. So, long story short, China Minsheng Bank is in a lot of trouble. How much trouble? Anybody's guess. Okay, Citibank tried to make a guess back in September based on, I'm guessing, August data, which now is outdated, could be a lot worse, and it's only based on what China Minsheng Bank is willing to admit is going on, and these people have a history of lying. So you cannot trust any of the information out there. This bank could fail tomorrow, this bank could fail next week, or maybe everything is okay. When you have garbage data, there is no way to make an accurate prediction. But if they really are carrying $20 billion of Evergrande debt, I can tell you this bank is toast. This is starting to look an awful lot like Bear Stearns, and it could be as bad as Lehman Brothers. Either way, the echoes of 2007, 2008 are very loud right now. And you know what? China got off easy during the global financial crisis. They may not get off so easy this time. So we're going to keep a very close eye on this story, and we're going to be looking for headlines involving Minsheng Bank in the coming weeks. Folks, I want to thank you for your time. Thank you for watching this video. Don't forget to hit that like button, subscribe to my channel, and use that notification bell. It really helps me out, helps me to keep this channel growing. I'd be forever in your debt. And until next time, live small and dream big.